Welcome back to the Capital Mindset Show, everyone. This is part 2 of the live that we started on Friday. Okay, so for those of you who were with us on the Friday live stream, you know, they had to end things a little bit early. We like to keep things, at a 2-hour length. Couldn't do a 2-hour, so to speak. But I actually want to start with talking about what earnings we're going to see this week, because I actually just took a look. We're going to have quite an eventful week, just kind of like last week. So taking a look at Monday, we got Bank of America, Charles Schwab, Bank of New York Mellon. I don't know what the company that is. And then I know that Synchrony Financial. So basically, a lot of financials still reporting. Again, gives us an idea of the overall health of the lending market. Charles Schwab is, I suspect that it's going to be better off for them. And they actually are expected to have a revenue growth of 2.7%. Bank of America is expected to have a 3% revenue decline. Bank of New York Mellon's basically flat. And who else? Who are you? We don't really care about you. And yeah, another growth for Synchrony Financial. But yeah, then on Tuesday we got Johnson & Johnson, Hasbro. Lockheed Martin, okay, Lockheed Martin's expected to have a 4% revenue decline. Truist Financial, I'm just looking for the financial stocks. We got Truist Financial expected to have 2.8% down. So Travelers, though, okay, but that's an insurer. Like I said, I've stated here. I apologize for that for a moment because the internet's coming in and out with the storm. Well, it's more like the power, I guess. But anyways, going back to what I was saying here. We got Travelers. So insurance companies, we do expect insurance companies to do better in a rising rate environment. Not so much banks. A lot of people think banks are, but I don't blame them because the media, the media, they always talk about how rising rates are better. So not necessarily, a little bit more nuanced than that. I'm trying to see who else is reporting this week. So since we're doing this on a Sunday, might as well have a little bit of it. Oh, ASML is reporting on Wednesday. A lot of you guys asked me about ASML, and I love that because that's a very good company. All right, I love that company. Now they are expected to have a decline of about 26.2%, and you might say, like, why do you like that company if they're expected to decline? Well, quite simply put, they have a near monopoly on the industry that they serve, and anyone can look up on their website. You can see the big machines that they do sell. I believe the cost off the top of my head is in the hundreds of millions of dollars per machine. And the company has a really good backstory that when I do a dedicated video to it, we'll go over it. Okay, Procter & Gamble. Okay, the reason why I'd like to see their earnings report is actually because I want to see how the consumer's doing. They actually are expected to grow about 3.1%. They're not the best indicator of the consumer health. Like I said, we actually want to look at the lending market, the lending growth. Wells Fargo is a good indicator already, but we are expect to see Bank of America tomorrow. Abbott here, I don't really care too much about that. Baker Hughes, who cares? Trying to see if there's any big names here. Oh yeah, the long hallway. What I think about Markel, well, I'm not selling any Markel. Markel's a hold for me, but I'm not really adding any Markel at the present moment. Now let's move on to Thursday. I think someone just said something reports on Thursday. SNA reports on Thursday. Okay, yeah, SNA, Philip Morris, NextEra Energy, SNA, I don't care about AutoNation. Tractor Supply. Let's see here. Nucor, and AT&T. Okay, so AT&T, well, 12% revenue decline. I don't know if that's including the spinoff of Warner Brothers, but they are expected to have a 12% decline. American Airlines. So we had Delta, and Delta Airlines reported, well, we actually saw data the week before saying that travel data was fairly positive. And so Delta reported, and it was good earnings report. And then everyone kind of rose. And I think we talked about American Airlines in the past, that American Airlines, they're the most leveraged, so they have the most to gain should things actually improve versus something like Southwest, which is probably the best capitalized. So nothing bad there. And then let's check out Friday, because Fridays we got a couple. Verizon. Okay, Verizon, American Express. American Express is going to be very important there. Kimberly-Clark, SAP. And yeah, we're pretty much done there. All right. So yeah, I think so far it's been really interesting earnings season. I think that again the banks have given us a really good indicator as to more or less how the consumer's doing. Based on Wells Fargo's data, I actually am kind of fairly confident at this point that we might see a slowdown. I mean, we are seeing a slowdown in lending there, and so I would expect that to manifest itself in the housing market in a 6-ish months, maybe a little bit after that. But I see some topics about GoPro. We have GoPro. Yeah, I mean, I've talked about GoPro in the past. I think it came from requests because people watched The Popular Investor. And The Popular Investor, I think that's one of his holdings. So a lot of people were asking me about GoPro. So I made that video, but I don't know if my opinions necessarily have changed on GoPro. Let me see what their stock price has done. I believe it has actually retraced. But I did think it was decently cheap, depending on the scenarios you kind of laid out. It was cheap, or it was moderately priced. But okay, so it's not down too much. It's down to $8.75. I think we talked about it when it was like about $10. But yeah, I can see the thesis there because what the whole thesis is kind of centered around the point that GoPro will transition over into kind of software as a service. I haven't used their editing app, but let me know if you guys have, if it's good or not. I heard that they actually implement some sort of smart editing system where the AI built into the software kind of predicts where you're going to make edits, and it's supposed to make it easier or something like that. But yeah. So as far as, let me actually pull up the portfolio and we can actually talk about the portfolio because I'm thinking about making some different changes in terms of strategy. And by the way, this is going to be maybe like a slower-ish live stream. So here, I'll share my screen here. Okay, let me clean this up. I'll keep the video planner out there. All right, so taking a look at the portfolio. In terms of strategy, I'm going to be focusing mainly on the ones that I've been trying to accumulate and bring them up to position. So I'm going to be adding more Magna International, still going to be adding to Meta, still going to be, I might add to LYB. I'm not really sure. Definitely what I'm thinking about is Cardinal Health has kind of reached a decent price point. I'm not going to sell it by any stretch, but I think I'm going to definitely not make sure I'm not reinvesting any dividends. I'm not really going to be nibbling at all anymore. Molson Coors Brewery, still holding that one. Unum is really interesting how this one's going to perform in this environment. Very excited for Markel. Markel's been doing fairly well more recently, but I don't really care too much about that because, as I stated to you, Julius, Markel's kind of like a buy and hold. Not really caring about what it's going to be doing unless it gets egregiously overvalued. Let me give myself some leeway there because I want to not corner myself there. But Discovery, I had it at a sell, but I actually transitioned it, back to not a sell. I never ended up selling it. I think I sold maybe just a couple shares, a couple handfuls, but like nothing to change the actual big size of the position. ConocoPhillips, it's already pretty much at the position that I like it. And let me actually zoom out here for you guys so you can see the allocation. So ConocoPhillips, I'm going to keep it at allocation of 2.35. Again, I've stated my opinions on where we are at in the commodity cycle. I wouldn't be too surprised if something occurs. I did state that in all the oil videos, and no one can say I didn't state this because it's in most of them. At least I did say that United States is the sleeping dragon in oil. And right now we are seeing data that we're approaching levels of oil production in the United States that, we previously thought would take a lot longer to achieve. And it seems that, again, we are waking up. So I have to change my, not change my thesis because it's part of the thesis, but change my behavior and allocation accordingly. So that's basically with that. BHP, I did bring that down already. And by the way, for some of you, you guys might be like, well, you're repeating this information. It's for anyone else who's joining and they don't know what's going on. I like to be accommodative to those people as well. One thing I'd be interested in, I'm going to probably do some extra research on Activision Blizzard to see if there is an arbitrage play. We've had a little bit of a history, Activision and I, and it was a good, short-term investment that was kind of just forced upon me because Microsoft announced they were going to purchase them. But definitely would like to see, because it'd be interesting scenario. Because like if we, let me actually see precisely, because I want to get it correct. Let me see. So that's going to be what price we at today? We are at, yeah, I'll just round us to 78. So 95, we subtract that 78, and then we divide by the 78. That's roughly about a 21% price appreciation potential if it goes through. A very similar thing that occurred with Aerojet Rocketdyne, which was it was sitting always at about 20%, but then that one did not go through. So you want to be very careful. Of course, Aerojet Rocketdyne, that was one where I added down on it, and then I lowered my cost base. It actually brought up the position quite a bit. Now we're up, about 12% here today. But if you're very confident that it will go through, I don't fault anyone for making that position, because what you're basically getting is a 21% if it goes through. And in this kind of market where future projections of market rates of return are a bit diminished because of the valuations where we're at, that's very attractive. And again, it's not without risk. The risk is that it gets denied, something falls through, something along those lines. So we want to be very aware, or at least you have to be very aware if you want to participate in that. It is not without risk. And it's not a free 20%. You're getting compensated for taking on that risk. So I see. Is this a question, fake alias? Because odds the acquisition gets blocked. Oh, you're saying that you don't think it will go through. Yeah, it might not go through. I mean, we see Lena Khan. Lena Khan is the right now she is the one who's kind of in charge of making sure. Well, she's the chairman. She's not the only one, but she has huge sway right now, and her philosophies are a little bit more on the you have to really prove that you're not becoming monopolistic. But yeah. So anyways, we're regarding actually my Netflix position, because I actually want to cover that a little bit. Remember, Netflix is a position I do want to continuously add. And where's my Netflix? Where'd you go? Where did you go, Netflix? It's completely blind now, apparently. Anyways, oh, there you are, Netflix. So Netflix is sitting at about 3.16%, down about 2.58%. So newer ad. And this one is one I do want to add at lower levels. I did kind of buy like one larger chunk. Okay. And then so I want actually to bring down my cost basis if possible. But just in case that I don't get that opportunity, I'm not going to cry about it. Thor Industries, again, it's kind of like a counterplay to another play I have that kind of play against each other. And they're almost the same size, by the way. But on the other one, when I made the only video, I think I might have one or maybe two videos on it. And I'm not going to do any more on it because of its size. I just reference it, and that's about it. That's all I'll do. And I had some questions actually asking me about some of those stocks that are microcaps. And I do state to that you guys in the comments, the only way I'll ever talk about them won't be in a dedicated video, but it will be in a live stream if you guys ask about it. I forgot what stock it was, but it was a much smaller company that was over there in that side of the portfolio. But regarding how it's kind of positioned, it's kind of interesting that kind of almost coincidentally they're positioned around the same size. Of course, that other position was trimmed down a little bit, and then I did buy back some more, and I did videos about it. Oh, and there's someone watching the portfolio right now, so you see how it's we're well. I obviously don't know who that is. It's Anonymous Hedgehog. So okay, so I had a question. Let me see if I have any questions here. Kind of small. LYB. Oh, happy Easter. Hey, happy Easter, Francesco. And happy Easter to everyone else as well, if you guys are celebrating Easter. Okay, so let's take a look. Yes, so you think U.S. oil production close to all-time highs? Yes, exactly. So precisely the point why when the facts change or when things change, you got to readjust yourself. You can't just stick to, well, I mean, again, it was part of the thesis. Like, I don't want to say it's against my thesis. It was part of the thesis that should that occur, I already planned out that this is what I would do. And we're basically, I'm kind of selling it off to someone else who was willing to pay higher prices for it. And I'm very happy with the returns thus far. I'm very, very happy. I'm not going to complain about that. Okay, so let's see here. Kind of small Netflix. Oh, will Netflix will be free cash flow positive one day? Okay, so Lex, we in the Netflix video, I did a little bit of a discussion about that, and I also talked about it in the Disney video. They go through similar things, but Disney does have CapEx. So I want to actually be very clear because Disney has a lot of physical assets. So you do have CapEx and growth CapEx, but with something that's with streaming services, you're going to have a lot of investment into non-physical assets. And then that's going to show up actually in the cash flows from operations. And it's going to make the cash flows from operations appear more negative than they probably are. Because again, we don't want to punish companies for growth CapEx. But remember, with something like Netflix, which is digital, their CapEx is not CapEx, like in what we can traditionally think of with the physical assets when we look at it in the lower line items in the cash flow statement. So it's in the cash flows from operations. So you want to be a little bit careful with that. What it does mean that it is going to be a little bit more harder to evaluate, and it's probably going to be better in this instance. And believe it or not, that's what it was designed for. But I know we go against that a lot here. GAAP net income is sometimes a better indicator for these kinds of companies. Now, Disney takes that a little bit difficulty, a little bit higher in terms of how hard it is going to be to evaluate, because you have that investment into content, which is similar to Netflix, which, you would say, oh, let's just use the net income. But then also you want to look at, they also actually do have CapEx, but you could still make the argument that just use net income, GAAP net income in that sense to get a good feel for the business, because something like Disney, the cash flows might be a little bit lumpy, right? Especially when you consider, for example, they're spending about 33 billion a year in content. So it's in both the Netflix video and the Disney video. We talk about those. Oh yeah, and then there's competition. So the competition regarding Netflix, well, I think Netflix is navigating it really well thus far. They're getting into a lot of reality TV. A lot of times when my wife wants to watch a show, let me tell you, it's either on Netflix, maybe HBO Max. Usually Disney might have some things that were catered towards me, like Star Wars, but they killed the child in me with their new trilogy, so I don't really care for it too much. Sadly, but that's neither here or there. And then opinions about Netflix getting into gaming. So I have to wait and see before I, give opinions on that necessarily. But I think there's a lot of potential. It's very exciting. I think that, if they can, I don't know how necessarily it's going to work. If it's going to be a separate subscription, it's going to be one and the same. But I'm very excited to how it turns out. I think Netflix should totally acquire Take-Two Interactive. I don't know. I know it's out there, but I think that would be perhaps a good acquisition for Netflix to acquire a bunch of different brands. I mean, heck, can you imagine if the way to get Red Dead Redemption or Grand Theft Auto is to get that subscription? Oh, a lot of people would do it. All right. So I don't know. That's just kind of throwing things out there. All right. When considering debt too, isn't Google better than Netflix now? Yes, absolutely. Well, Google is going to always be for the foreseeable future, because I don't want to say always for the rest of my life, but for the foreseeable future, it's going to be my largest holding. Google, again, I've talked about it in the past. It's a fantastic business. It's a spawner, so to speak. And that's where I agree with Monish Pabrai. I've disagreed with Monish Pabrai on several occasions, and that's the beauty of a market. And I don't believe it's completely okay, and that doesn't mean he's like a bad investor or anything like that. But disagreement is healthy, and I think that I agree with Monish Pabrai on that. Alphabet is a spawner business, and I love that about Google. I think they're very well capitalized to really get there and invest in the future. They have so much great businesses within the business that they're able to kind of try out new things until something else works. And it's okay for them to fail, because it's not we must win or we must lose. Now you might say, well, that then makes them not as vigorous, right? As motivated to win. maybe that's true, but um, I don't think for now it's much of a problem. Okay, and then if you consider also, yes, they're very well capitalized, as you say now, and I think they'll continue to be very well capitalized. There really isn't much of a reason for them to um, take on debt. I mean, again, the reason why they might take on some debt is because they get such low cost of capital. Who wouldn't lend to Google, right? So, thoughts on SAP? So SAP is kind of in its cash cow phase because of actually let's pull up. Um, Let me actually see SAP stock. Bring it over here actually because I want to. All right, so SAP stock we have, yeah. Last time I checked, this is like in its cash cow phase. Not necessarily that it's a bad company or anything like that. My gosh, I didn't even realize it came down like this. Yeah, you see, I haven't taken a look at this in a while. Okay, so it's actually come down decently. That's why you're probably asking. 30% down. I mean, I remember it being even more expensive than this. So yeah, it has come down. Very interesting. Very, very interesting. I mean, we can look at it live here. We can say, let's find it. Just pull this up. Let's just pull it up right here. SP. Why not? Let's just look at the presentation then. Let's just see what their sales pitch is. Okay, so solving the customer's largest challenges, business transformation, supply chain resilience. Okay, cool, whatever. Accelerated move to ERP and cloud in Q4, rise in SAP modular offer. Okay, so what I'm getting from this, investment in cloud. Okay, a relentless focus on customer value. Well, everyone says that. Compelling our, complementing our portfolio. Okay, so these are their acquisitions. So these would be something I'd look into if I was doing an analysis on them. I'd look into these two acquisitions, kind of get an idea of what do they really add to the table. They say that it is. So this is again the sales pitch. They're saying, hey, this is doing this. Okay, then we would research that and kind of try to understand what is the picture of management, because then we kind of can get an idea of their plan overall. And then from there, we can visualize and maybe agree or disagree with management. So cloud revenue, okay, that's actually strong growth. Cloud software revenue, well, it is, but it is a small amount. Software side is the lion's share, and it's only growing at 5%. But still not too bad. More predictable revenue. Okay, cool. Current cloud backlog, pretty good. Okay, I know this is obviously a global company, but I'm pretty sure this is in its cash cow stage, or at least they have these cash cow businesses, and then they have these smaller, but still quite large, growing businesses within it. And so, depending on how much you think these are going to make up in the future, that affects actually your valuation. Um, of course, just by looking at perhaps what the market was kind of saying is, and I think I do remember back in the day, I didn't do a video on it, but that's why I stated that, and then I got surprised by saying, "Oh, look, it's actually down," because I remember it being much higher. So this was a surprise to me, and actually, it does warrant a video. So I'm gonna make sure to put that on the list there. Okay, so I'm definitely gonna make a video on this because it might be an opportunity. I don't know. I'd have to really take a look. But thank you for actually asking this question. I really appreciate that. All right, so gaming is entrenched, and let me actually push us away from there. Gaming is entrenched and competitive. Don't see why Netflix should be that great at it. Yeah, I don't think they're going to be fantastic to the point where everyone must go there. I think competition is great. I enjoy a good game here and there, but um, I can see the point. Yeah, I think that if they have the motivation to, and they want to actually spend the money to develop a very good, compelling game, that's all better for the consumer at the end of the day. So, but I agree with that. Netflix seems to be really investing in foreign language content. Don't see nearly the investment by other streaming services. Yes, exactly. I completely agree with that. I mean, should we all remember Squid Games? That wasn't actually even meant to be a hit in the United States, but yet it was, and it was just a Korean show. Very good. I mean, you can see this with I think Casa de Papel. Um, there was a couple other shows. Like I think my folks, because they just came back actually from Europe. The they were telling me about this show they saw. It's like it was, I think, Portuguese, so from Portugal, and they enjoyed it. But anyways, that's anecdotal evidence. All right, please don't acquire Take-Two. Yeah, I can imagine, because you don't want them to ruin the games. I can sympathize with that, you know. Hey, Dark Knight, how you doing? Google should start streaming service, then discontinue it after a year. That's a burn. That's a burn on Google. Yeah, yeah. Yeah. I mean, don't they have like YouTube Red, or not YouTube Red, YouTube Originals, or whatever, you know, Google, if you're listening, you know, I can do like a scary hotel thing. I don't care. You know, I'm just kidding. What I think about VMware? Oh, actually, VMware, I had invested in Dell a while back, and that was the thesis actually was contingent on the VMware spinoff, which actually ended up having, which is funny you mentioned that. But VMware is an interesting software play. Also looks cheap, appears cheap. I'll do an analysis on VMware. I think I might have done one already. I've done so many videos at this point that I don't remember if I have, but someone might be able to comment that if I have. But if not, I definitely need to do a video on VMware. But yes. No, I have not Elemental, because after Friday, Saturday is my off day, completely off day. And then Sunday I had work in the morning. And then, you know, I'm just having the live stream now. But I haven't had the opportunity yet, no. Instead of going to the moon, EcoWave Power can harvest power from the moon here on Earth. It literally can't go wrong. Okay, so then that's exactly okay. So they do that. I'll take a look at them. Hey, Fabio, happy Sunday. What do you think about investing in small caps? I want to start doing it, but it's entirely different process on its own, looks like. Yeah, small caps, they have been beaten down more. And if you think thing is, it's almost like they're beaten down for a good reason, because when you think about it, the big boys, they have a little bit more levers to pull sometimes, but the small caps, they're supposed to be more nimble. That's like the benefit, you know, more nimble, smaller business, you know, easier to make some changes here and there, easier to adapt to changes. So I'd say that, I mean, well, Thor Industries is a small cap. I'm buying that one. I mean, I think we can count that as a small cap. It's the biggest competitor in that field, but like, you know, relative to, you know, sizes, I think that means that's actually more of the answer, that it means it's relative. It's a little bit more nuanced, because maybe Thor, within the microcosm of its industry, right, or taking its industry as a microcosm, it's a large cap within that industry. Oh, obviously they're competing against Berkshire Hathaway's subsidiary. If you count it as Berkshire Hathaway, then the largest competitor is huge. But as far as market share goes, they have the most. As far as my other purchases, yeah, I guess, like, I mean, I don't know what you count overstock. Overstock is let me actually don't let me look this up so I don't misquote myself or something. No, overstock's market cap's 1.6 billion. That's a small cap. I mean, but that's on the speculative side. If we're thinking about my core holdings, yeah, I haven't really buying any small caps deliberately besides Thor Industries. So yeah, but I think it is interesting. I mean, there's so many stocks. This is what I love about it. It's so fun, you know, just to find stuff, find a new company here and there. I can't do it. Yeah, my wife still thinks it's a dolphin noise. She swears by it. And just so everyone knows, the Strongman actually was doing tax season, so we haven't been doing the live streams. But you know, you guys gotta give him a round of applause, because he's gone through his first busy season here, and it's a nightmare. All my friends that are doing busy season, and they all attest to the same thing. Any of you out there who are also CPAs going through a busy season, hats off to you. It's over. Well, you're ending it. You should be ending it like for here, but yes. Oh, and yeah, here he has actually a comment about it. Yeah, tax season over. Just yeah. What's your allocation plan for Meta? So Meta's allocation plan is going to be guided by its price. So I have I have an idea of where I'd want it. And if you ask me now, I'd say I would actually want to make it closer to Alphabet. So probably my second largest holding. It could get there, but the valuation has to also accommodate itself for that. So if it gets to under $160-ish a share, that's where the allocation of purchase orders get really drastic, or start to get really drastic, and then you would see its allocation step up closer to Alphabet. But if it doesn't happen, then it won't get there, and that's perfectly fine, and I'll just keep it where it is. Hi Fabio, just joined the chat. Thoughts on Peter Schiff doomsday predictions? Can he be right again? He's been a dollar bear and warning about inflation for a while. Can he be finally right? Well, he wasn't universally the only one stating what was going to go on during the financial crisis. So that's important to note right there. I think that his prescription of the economy is like, I sympathize with it because he comes from the Austrian School of Economics, and I actually enjoy and ascribe to a lot of the philosophies of the Austrian School of Economics. But the thing with Peter Schiff that I kind of think is that it's too quick, the doom and gloom per se, and there's a lot of factors that you have to consider before it would even get to that point. I mean, one is to where I have a big disagreement with him is money printing. So the Federal Reserve, all this that we've done isn't actually printing money. If you want to actually look at a country where we actually printed money, you can go no other than Venezuela, where I was born. And there we actually did print money, and you can see what happens in inflation when you actually print money. Don't worry, the United States hasn't printed money just yet. As far as the current system, how the current system works, and that's why I keep highlighting the word current. It can change, and then what I'm saying here will go out the window. The United States does not print money. The West does not print money. The West borrows money. And as long as the actual amount borrowed, so you basically have a dollar, and then you match that dollar with a liability, and so you haven't really created any money per se. I'm not going to get into the complexities of like how government debt is utilized as collateral and why it's necessary to blah 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 blah. But just sticking to QE, and we're only actually talking about QE because fiscal spending separately can be quite inflationary. Because it is directing demand or directing dollars in a particular direction, and that can cause demand. But in isolation, looking at QE, what it is it's not necessarily at all. It's not money printing. People think it's money printing, and I enjoy the jokes too. Like I love the memes, like the money printer go brr. Oh my gosh, those were really funny in 2020. I did actually write an article. I think I'll find it. I talk about it, but it was on the website when the website was up for Capital Mindset, and then it obviously the website was down, but it's still on my LinkedIn. My article talking about and of course on LinkedIn, obviously with Microsoft, I wouldn't be able to fake the date it was posted or written. So I take it out. It was a good call at the time, based on what I understood then, that it was actually, I forget what date exactly was written, but it was written sometime in March of 2020. And it was stating the general idea was that the Federal Reserve's policies were going to drive up a lot of liquidity. Of course, we're always learning. So actually what I come to learn more was that the effects of the psychology of the Federal Reserve were actually far greater than I anticipated. One of the moves I actually documented in that article was actually my sales of bonds and then the purchase of stock. And it turned out okay, but like looking back, there's actually even more that I learned that was more interesting. So we're always looking at our past selves and saying, wow, well, there are some things that should have been like fine-tuned in terms of that thesis, but oh well, it was decent for the time. So I was actually, just before getting on here, I was actually just watching your video, Strongman, about stock mode, and I've never seen this man. I have now understood the levels of let's say energy secretion that might occur when you watch that person. Interesting choice of words there. I just want to say he's boring, but he's boring. Ignore Peter Schiff, snake oil salesman that doesn't deserve our time. Okay. I know that there's a lot of people who do feel that way. And I do. I try to be diplomatic. Can Netflix buy Twitch? Hypothetically, well, I think Twitch is owned by Amazon, so Amazon would want to sell it. And the thing is, we can kind of see how YouTube is coming after Twitch. I mean, we're having this live stream on YouTube and not Twitch. I know Twitch is dedicated live stream, and I've listened to some other live streamers when I was actually looking up videos on how to do better live streams. I've, obviously the videos that usually get recommended are people who do this professionally for a living. And I watched some of their videos, and some side comments that were being made was that YouTube will, in their prediction, become a very good place for live streaming. And I agree with that. I hope for that. So, I mean, again, I have no interest in really live streaming on Twitch per se. I think my audience is here, and Twitch audience is a different kind of audience. No, I haven't watched the new Warren Buffett interview. I'll get to it at some point, but really just remember my Saturday was a relaxing day. Went out in the water. I got my stand-up jet ski to work again, or my gearhead friend was able to actually get it working again. So it was just actually a ground cable that was off somewhere, but I enjoyed that. And so we had the boat and the jet ski out, and it was a fun time. And I didn't look at stocks, didn't talk about stocks. It was a fun time. What about honest, my bonest? Well, something positive could always come out of that. We just have to kind of wait and see. They have yet to prove that to me that they're kind of executing well in that direction. So I'd have to. I mean, I want to leave leeway for them to actually show that they can do it. I don't say it's impossible for them to do it, but yeah, that's my honest criticism or opinion. Do you think it'll be fine to calculate free cash flow in a way everything money does? It just seems so simple. Projecting all the capex, appreciation, depreciation is too hard sometimes. Well, okay, so in mathematically speaking, if you adjust your growth rate should be fine. Like all of that should be implied in the growth rate. So if you think they're going to have greater capital expenditure than normal in a couple years, just lower the growth rate. It should more or less equal out to the same thing. The point of what you're trying to get is that the cash flows are to a certain amount per year. Okay. And I mean, there's other things up with that way of doing things or that type of model, but for the most part, you should be okay if you do that. Fabio, thoughts on ASML? I mean, ASML, fantastic company. We are seeing kind of a slowdown for all semis. I mean, again, we looked at Intel on the last one, but Intel, AMD, all of them are down. And so ASML, I expect no different. As you can see in my portfolio, I'm quite lacking semis. I only have one semi stock, and that's a Cirrus Logic, and that's it. Oh, that's a small cap. There you go. That's another small cap. At least I think we can consider it a small cap. But I have no semis really in the portfolio at the present moment. I had Intel for a little bit, and then I sold it, and I won't repeat why I sold it because I think for most of you, you're going to be like, oh, please, not this again. But yes, I don't have Intel. I don't have AMD. I would like to have AMD. My favorite one would be NVIDIA, but NVIDIA is just too expensive. But AMD is another very good one I would like. And then Intel's another good one I would like. I would like them all, but at the right prices. I think they're getting there, though. I definitely do think that. And you might, don't be surprised if you end up seeing soon some semis. Yes. Small caps can definitely still have moats and definitely still be profitable. Absolutely. Yeah. Peter Schiff has some interesting macro thoughts. Yeah, because, okay, so the basis of his macro understanding is from the Austrian School of Economics, which is a sound form of economics. It's sound. I'd say it's better equipped than something like MMT. MMT is a newer one, and MMT, while is very fascinating, it does actually have a certain prerequisites in order for it to be correct, which even the creators themselves talk about, but a lot of people kind of goes over their heads. The part that it has specifics in terms of prerequisites, as in not all countries can engage, or MMT doesn't describe all countries. It describes particular countries with certain bestowed powers that are only kind of like self-fulfilling prophecy kind of thing. So, but yeah, the reason why it's sound is because he bases it off of the Austrian School of Economics. What I see some people have criticisms for that I'll actually say to you, Lix, is to consider this: the possibility or the how do I say this? The potential for conflict of interest, that Peter Schiff is at the same time trying to sell precious metals. So he believes that the dollar is collapsing, but yet accepts dollars as payment. So a lot of people point to that as some form of criticism. What would be interesting is if you found some similar criticism of an individual who believed similar things. And I'm sure Peter Schiff might have addressed this at some point. Maybe he has. Hopefully he has. But maybe let's say there's like a Bitcoin guy or a gold guy, and the gold guy is like, you have to get out the dollar, blah, 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 blah. And then he's like, oh, you go to him and you're like, oh, can I buy your Bitcoin, give you dollars? And then he'll say like, no, I don't want your dollars. I want my Bitcoin. Or no, I don't want your dollars. I want my gold, kind of thing. And then in that sense, I would be like, oh, okay, so he practices what he preaches there. Peter Schiff, not saying that he doesn't practice at all what he preaches, but it is interesting. That's a main criticism that I think has to be, oh, sorry for hitting the microphone, but has to be addressed. Thoughts about microcaps, Fiverr. We're getting into interesting topics because microcaps have so much potential, obviously, but more difficult not more difficult, almost like equally, but like if you're wrong, you're going to be really wrong. So that's what makes it more difficult to get consistent performance, because you can pick up a bunch of microcaps and some of them are going to go terribly wrong. Some of them are going to go great. There are some microcaps that oh my gosh, I forgot the ticker of it. It's a really small. It's OTC. It's a family-run company. It's been around for a really long time, and good thing I don't remember the ticker, because maybe I shouldn't even talk about it. But it's about like a $35 million market cap. Their business is like, I'll describe their business. It basically, I think they make circuits, like circuits for like missiles and stuff. I know that they're based out of New York. Again, I don't remember the ticker, and maybe it's a good thing I don't remember the ticker. But yeah, because listen to the market cap, 35 million, so really small. But it's done fairly well in terms of performance. But basically, how they really generate cash flows to shareholders over time has been primarily through dividend payments, and they haven't been a diluter really. So but those are like few and far between when you find companies like that, because a lot of times you have management issues, especially if like you have to trust the family running the company in those instances. Thoughts on Fiverr? I did an analysis on Fiverr. It was kind of actually a reaction video, quasi reaction video. It was the a precursor to the reaction video, but it was on that guy. I don't know where he's from, but Sasha, whatever. And he was doing videos on Fiverr. I found his analysis quite interesting, where he actually repeated line items a couple times. I don't know if you noticed it. But anyways, he was very bullish on Fiverr, and I took a look at Fiverr based on subscriber request, came with a link to the video. I watched the video, and I didn't go the video. Again, it's a precursor to the reaction video because I didn't have his video playing at the same time. I just quoted his video. Definitely a good watch if you're interested about Fiverr. But in that video, I stated or talked about how Fiverr was at the time egregiously overvalued. And perhaps now it's getting into a more reasonable valuation if it's been coming down. Let me take a look. But in terms of comments as to the business, they're one of those stocks that has the entirety of the moat located or focused on the network effect. And if that ever is challenged in a meaningful way, that won't be good. But there's not a moat per se, like something it could not be replicated. It's a network effect. And there's a lot of other minute risks, such as, what happens if I start just doing business directly with the end client, stuff like that, which I'm sure Fiverr is addressing. But those are all never going to be permanently or completely eliminated. I think generally, Peter Schiff is great, but an idea that risk-free rate has to be positive isn't correct. Yeah. Okay. Yeah, that's actually true as well. Yes, it is true. Yeah, because he does state that, and that comes from a position that something like sound money would be the go-to when everything's kind of going nuts, right? But at the same time, we've had economies where we've had deflation. United States had deflation. Actually, if you read the book, for example, The Price of Tomorrow, which is an interesting part of the book, was discussing the economic reality of the United States prior to World War One, we actually went through a massive period of massive economic growth, but also deflation, which is a lot of counterintuitive to modern theory. But that's because I think a lot of people don't perceive what economic growth might be. I think economic growth, for example, is an increase in like wealth and the capabilities for the citizenry to kind of have demands and have those demands met. So demands is in like, oh, I want like a basic one back in the day, like back in the way day, I want clean water, right? And then so the wealth of that society was determined, okay, they want clean water. There's demand for clean water. Can they get clean water? And then that would determine, okay, then they're fairly wealthy. They're getting what they want. You want everyone who's above a certain status is getting like this X amount quality home. That's another indication of wealth. There's vehicles like in the United States, like, I mean, come on, what kind of country? Well, look how many cars we have. It's fairly normal for families to have sometimes even more than one car. And not sometimes, I'm saying actually quite often. And then so that's an indication of wealth. Not much of the world is not like that. So yeah, I agree with you, Elemental, on that. Second year busy season worse is saying at least in audit. Second year busy season gets worse. Yeah, I can imagine. I mean, that also depends, I know, on like the clientele you get. So if you get like it depends on like the type of clients that your team's working on. Okay, definitely possible for all CFAs even in a growing economy. Yeah, well, okay, so I think I just accidentally covered this point, but yes, no, there was a time period in the United States where cash or cash backed by gold, or cash backed by gold was going down in an era where the economy was growing drastically because there was a ton of deflation. Because products were becoming cheaper and cheaper and cheaper. And in that instance, the value of your the value of your money is going up, but the value of assets per se is going down. Like homes are coming down and stuff like that. But yes, I won't go to 160. Okay. Is this for Fiverr? Sorry, I don't know the context of this. Is this for Fiverr? Yeah, QE prints bank reserves. Very good, Licks. That's true, extremely true. QE prints bank reserves, but bank reserves are not money per se, and that's why I say in the current system, in the present system, QE is not money printing, but that can very much change, and that's my prime disagreement with Peter Schiff, is that he often states that, where I kind of can kind of make like a bridge in terms of our an agreement, like an olive branch, is maybe in the sense that. When government not prints, you see, there you go, I'm saying printing. When government borrows a lot of money and then goes out and spends it, there's an assumption that they're going to pay it back. Then you could say, well, in a scenario, what happens if they don't pay it back? Well, that has a whole bunch of implications, but let's say they don't. One of the possible consequences is a point of hyperinflation, that might actually be the case. Because if we conceptualize this in terms of, we kind of take a step back, we conceptualize this scenario. We have a dollar being created, but then it's being like, it creates a form of debt, right? So you borrow, right? Money is borrowed, and then that is like not, it's like 1 minus 1 is equal to 0, because conceptually, like, okay, when we pay back, there'll be less, money is destroyed. Okay, then what happens if it's a 1 minus 0 that represents default is equal to, well, that equals 1. And then so conceptually we can kind of picture it out, what kind of that would look like, and that would make sense. If we've seen it happen in the past, when countries default on their debt, usually what follows is some form of hyperinflation in that currency. Not saying that the United States will at any point. I think when I kind of modeled it out way back when, I think I got it to, like, based on present conditions and including a lot of somewhat pessimistic scenarios in some instances, I think I modeled out that the United States has like 40 years on the current trajectory, which is a whole lifetime, right? I will be in my 60s, to give you an idea, by the time that starts to become a massive problem. I mean, it is a lifetime, and humans do live short lives. So there you go. I mean, but that there's so many things that could happen between now and then that could completely change that. Those assumptions were based off of current trajectory. And yeah. Anyways, hey Fabio, when you establish a position, do you care about the technicals, chart patterns, volumes, blah blah, or strictly I bought at a good price, best on fundamental analysis, and assessment of risk? I sometimes will use technical analysis, but technical analysis mainly works in the sense that it's just behavioral finance. So from the perspective of behavioral finance, you can give you an idea, but no, primarily my decision-making factors are fundamentals and then how I feel about it. And then I kind of just like set it and forget it. Just goes out of mind. Once I made an investment and I've decided it, I have a very strict policy that I tend to not try to look at it all day, every day. I try to look at what's going on with the company, but I don't try to look at the actual stock in the brokerage account. Even when I'm trying to sell, I'll try to get an understanding of like where the market's at in terms of sentiment regarding my investment. But yeah, I hope that answers that question. Just joined the stream. What does the Fed actually buy with QE and why? None of it helps the people, just rich people. Well, the Fed isn't necessarily, it's not buying anything. The Fed's not buying absolutely anything. The Fed is just making a swap, and that's about it. It's basically passing on the liabilities, or making a swap with the bank. So I'm trying to simplify it in a way, but I've covered this in other videos. So let's say you go to the bank. When you go to the bank, you give the bank your money. Let's say you give the bank $10,000. Okay, you gave the bank $10,000, and it's in your savings account, checking account, whatever it is. Well, the bank, that's a liability because that's a payable that they have to give you should you ever come to the bank and say, I want my money. Well, what they go out and do is they try to turn that liability into an asset. So they go out and buy debt. And ignoring, let's not get too complicated. Let's ignore like liquidity necessities and stuff like that and collateral and all that. Let's just keep it simple and say the bank needs to go out and get an asset. It's going to go out and buy some form of debt. It can get a mortgage. It can do private lending, any form like that, or it can buy municipal bonds, or it can buy treasuries, which is what typically they like to do. And Jeff Snyder comes in here with his research and says, well, that's a concern because they're only wanting to do that. That's a sign that something else is really wrong with the system. Because usually you want banks to go out and lend into the economy in various different ways. And when they're just wanting to only buy treasuries, it seems, primary dealers, well, this is necessarily a problem. So they buy the treasury, and the treasury goes on their books as an asset, right? Your deposit's the liability. They grab your liability, or the liability you gave them, and they went out and they purchased an asset that's supposed to counterbalance that, and then they pocket the difference between the interest they pay you and the interest they collect on the asset. Again, right now, let's focus on treasuries. So then what the Federal Reserve can do is they can go onto the balance sheet of these commercial banks, and they can say, okay, well, we're going to do an asset swap. We're going to give you a reserve note, and then you're going to give us the asset. The asset's going to go onto our balance sheet. You're going to get a reserve note instead. And then this process can continue. Now, where things get a little bit more complicated is when we get into necessities for collateral and the like, and not sometimes, but banks do need a certain portion of treasuries because treasuries are pristine collateral, or they're considered pristine collateral in the banking system, which does make things a little bit complicated when the Federal Reserve is taking away all your collateral. Then enter the reverse repo and such, and you have to basically kind of give back some, but we're getting overly complicated. To answer your question and keep it on the topic of your question, they're not buying anything. They're just making a swap. And in accounting, if you're an accountant out there, it's very easy for you to conceptualize that. You're just switching accounts, but it's nothing has been created by QE per se. And it's not necessarily that it doesn't directly actually even help the rich. I remember this quite frankly very vividly, and especially because I also did tutor for a while. In economics, at least in both the high school level and I think maybe in the college level too, they do teach in some capacity. I don't think in college, let me scratch that, but I think in high school, in maybe history class as well, they teach that, for example, inflation is bad for the rich and good for the working class. And in fact, this is where I might think that you might be sympathizing with that, or saying that in another way. Because you're probably associating QE with the inflation. Well, when you actually take a look at it, QE helps, not QE, sorry, there I go again. Inflation is very kind to those who hold debt. And typically those who hold debt are those who are, or who can amass massive amounts of debt. And we're saying debt that is productive. Let me be very distinct in that. Debt that is productive is typically held by the wealthy, because if I go to the bank and I say, oh, I want a loan to purchase a home, the bank might very well give it to me right then and there. And then different people in different situations, they go to the bank, say the same thing, and they might have different experiences. And so it makes sense intuitively from how, based on risk, that someone with more means is going to get more capital lent to them, because you're more likely to pay it back, and you're going to get it at a better interest rate as well, right? Um, so considering that as well, the wealthy tend to have those debts in productive assets, and should inflation occur, then that's better for them, because they're still in productive assets, and that debt going towards that productive assets, especially if it's a fixed rate debt, it's they're going to do fairly well. Now you take the wage earner. The wage earner is a lagging indicator, or a lagging reaction force. So wages always lag the whatever prevailing thing. I doubt the whatever company, any company, even the government, would do in raising wages as a precautionary note, right? They don't do that, right? And it doesn't make sense to do that. If you were hiring people, you probably would not think that's a good idea, because it's not. Because what if you're wrong? So it makes sense that always, typically, that deflation or inflation, wages are lagging indicators, or lagging the effects. And then this is problematic, because prices are rising in real time, but your wage doesn't necessarily rise in real time. And this was a perfect example of something that Venezuelans lived through. Venezuelans lived through this. Wages would go up maybe the next month, or maybe in 2 months, but the inflation was tomorrow, or the next day, or the day after that, and so the wages can't keep up naturally. The same thing kind of goes with deflation, though. Deflation, in the same effect, is arguably more beneficial to the wage earner. The wage earner, because again, wages would go down as a lagging indicator, because the deflation. So like, you're making, let's say, $100,000, and then let's say we have a deflation of 10%. Right? I'm not going to give a time period, but let's say we have 10%. Well, your workplace might not lower your salary, which is probably unheard of in the United States, in the modern United States, but your workplace might lower your salary to reflect that deflation. And reality, you won't be in a worse off part in the future point, but you have to consider that intermediary time period between your earned $100,000 and that change, when you will have that pay cut per se. You're still going to be making that money, and while in the economy you will be experiencing prices coming down, so you do have a net benefit there. But in an inflationary environment, you have the net negative, because you are not, again, it's a lagging effect. Your wage won't rise until after the fact, or not until sometime in the future. But I think that's what you're getting at with QE, because a lot of people, when they say QE in the same sentence, typically what they mean, you're referring to, is the inflation that is associated with QE. Long-winded answer there, but I wanted to make sure I get answered you. What would you recommend at BurgerFi as a first thing? What would you recommend to get at BurgerFi? Oh, I don't know. Like, definitely. Let me tell you. Definitely the custard shakes. The custard shakes. I know it's like a sweet tooth thing, but the custard shakes. As far as a burger, they have pretty good burgers. The CEO is like a very fatty, because it's like Kobe. My friend, who's more culinary than I, says that it is a waste to eat Kobe meat, or fat. No, not Kobe meat. Yeah, Kobe meat as a burger, because you can technically put more fat into it. But regardless, I'd say the all day breakfast burger is pretty good as well. That's a pretty good burger. But no, the custard shakes is really what kills it every time. I'd say the burgers are very comparable to Shake Shack in terms of like taste wise. Shake Shack does have the smokehouse burger, which is amazing, but as far as the custard shakes, I got to give it to BurgerFi, believe it or not, and it's not even in their name, which is funny. Someone said, if just one follows money markets, it's hard to lose. Any idea how one can follow the money makers and profit off of it? Well, no, the thing I think where you're talking about with money makers, sorry, when money makers, I need just a follow-up question before I can answer that. Are you referring to banks? Are you referring to large investors? Which one are you referring to? And then I can answer that. Um, Fabio was out on his boat. Maybe. um, best book on accounting for investors. On accounting. Ooh, I actually don't know. I mean, I didn't really read any books necessarily on accounting. There's different books like The Acquirer's Multiple, which that's they're all finance. Because finance and accounting very similar. Accounting is how to create the financial statements, how to formulate them. As finance is taking those creations created by accountants and then deriving meaning from them. So that's the difference between finance and accounting. So typically, investing books are finance books. Accountants, it's almost seems natural for them to learn finance, but being very precise in the meanings of both, and I studied both in university, was accounting is designing and then formulating the financial statements. Finance is specializing in deriving meaning from those financial statements. So most, again, investing books are finance books, because when you look at the Acquirer's Multiple, that's a finance book. And by the way, to get your CPA, you do learn finance. There's a whole test dedicated to pretty much finance. But yeah, the Tobias Carlyle makes some good books. 100 to 1 is a good book again. The Intelligent Investor is a good book again. There's so many good books. I always forget them. But yeah, those are just some finance books or accounting finance books. Any view on the Charter Communications, a mature business that seems to generate predictable operating cash flows, share buybacks. Stock is down 30% since September high. Well, the thing is, it's definitely a cash cow. I think I know that business. And isn't that like they have like what is it called? How come I can't think of the name? They do TV stuff, right? Charter Communications, like Charter. Yeah, they do like TV stuff, like your satellite cable bill, stuff like that. So definitely a cash cow. Um it'd have to be very cheap. I'll take a look at it, but it has to be very cheap. Let me actually pull it up. Charter Communications stock. All right, let's see what the, unless I'm absolutely confused on what this company does. But I think that's what it was, right? Uh I think I'm actually confusing it with another company. Let me check here. If I take too long, I'm just gonna have to say I'm gonna make a video on it. But let me see here what this operates abroad. Yeah, okay, no, I was right. Broadband connectivity. This company is a lot bigger than I really thought it was. So that just tells me I need to actually look more into it. It's not priced as if it's a cash cow. That's really interesting. I would think that it would be. Oh no, but they do a lot of stuff actually. No, yeah, they do a lot of stuff. Provides internet. Yeah, no, they do a lot of stuff. So I'd have to. This would warrant a video. Yeah, this would warrant a video because it's something I would actually be interested in actually learning about. So I'll make a video on it. Do you think stocks are a good inflation hedge? During World War II, stocks actually went up because people were worried about inflation. Yeah, no, always. Actually, real assets are always going to do great during inflation. The Venezuelan stock market was the best performing stock market in 2008 in nominal terms because inflation was, I don't know, I forget how much it was, like 1,000,000%. And the stock market of Venezuela went up about 200,000% in nominal terms. And then when you take a look at in dollar terms, it was down like 99%. So, yes, that's yes. And if we see massive inflation, massive devaluation of the currency, yeah, hard assets, real assets, they're going to do great. Stocks, companies are actually great. Some will do better than others because some will have more protection than others. But yes, they would. Cash will definitely actually be destroyed. But that's the obvious. Okay, can you give us an update on ASPS? Voxer just pumped after Canada raised rates 50 bips. Okay, so yes, you might be one of the ones who asked me about that company, and as I stated, I will only update or talk about these companies if someone asks really more directly on these live streams. But otherwise, it's gonna mostly be avoided. And I'll share my screen here with you guys here. And I'll try to zoom in here because now we're going to go to the other side of the portfolio. So ASPS is a microcap, we could call it that. Basically, what they focus on is they provide services for foreclosures. That's an oversimplification of their business. And you can kind of see here the rationale is counter-cyclical. The allocation right now is 3.03%. And that's even after I sold, took profits, and then bought some more back. So this is where it is now. We are up still on the total. And when we bought back, it was like just barely, by the way. I didn't buy back the full position. Instead, I actually created new positions with some of that money. I think Overstock was actually born of it. Overstock or Zillow, one of those two was born of it. But anyways, Altisource or ASPS, they're kind of a counter-cyclical play that I have in the portfolio. If things go bad with the housing market, the middle class, etc., it's going to do fairly well, or should do fairly well. So I imagine Voxtur went up for similar reasons. Voxtur is a software business, another micro cap that I haven't really discussed. It is recommended, or it has been asked for. It's just questionable whether or not I'll get to it because of its size, but I'm mentioning it here on the live stream because you are mentioning it. And I don't own Voxtur, but I took a look at it, and they offer software-related services similar to ASPS. So the theory is that since interest rates are rising, their services are going to be more necessary. Both of them will be a little bit more necessary. The thing with ASPS is when I was purchasing that company, the business was quite literally not allowed to do its thing. So the mortgage moratorium was in full effect, and they were just basically, their business was made illegal. And they actually, one thing that did save them was they actually were able to sell one of their subsidiaries for about $100 million-ish, which was almost the entire value of the company. And that was an incredible windfall that occurred. And on top of that, we now seeing that they're able to actually act on those foreclosures now. So should things get worse, should maybe the middle class gets a little bit worse, gets a little bit hit from things, we're seeing data from Wells Fargo indicating that perhaps maybe it serves as kind of like a counterbalance, almost like not a security, but like an insurance policy should things get bad. And then that's the one I always reference to when I have it as a counterbalance to something like Thor Industries, where Thor Industries is reliant on a good, healthy middle class consumer. Altisource Solutions is almost like the opposite of that, but not necessarily, but almost the opposite of that. All right, so let me actually stop the screen sharing here. The more I hear you explain macroeconomics, the more I'm convinced I should just completely ignore it and continue to focus on a long-term. Yes, that would be a far more successful approach and strategy than focusing on how does macroeconomics affect your investment strategy. Most people are going to be far more successful just worrying about finding good assets that they want to accumulate. And maybe what you should worry more about is maybe your local political environment, because that does affect the underlying value of your real assets. So that, I don't want to say that can't, and especially like from the perspective or the perspective I come from, being Venezuelan, I think that's a fair reality that, every Venezuelan lived through. If you owned any sort of assets in Venezuela, that philosophy didn't hold true. Just buying good assets did not pan out well. Turned out that, the external factors can absolutely demolish the real value of said assets. So maybe that's probably the only thing that I'd say maybe focus on. But no, other than that, focusing mainly on the bottom-up approach in investments and investing is fairly successful. Because when I say is like when you try to make a macroeconomic prediction, you can miss one detail, and that one detail makes your whole thesis incorrect. And let's say you put a lot of money behind that thesis. Well, no, that's gonna suck, so to speak. Oh, and hey, DM, by the way, the complaint about Peter Schiff access Bitcoin in dollars is absurd. Fabio, as soon as he gets those dollars, Bitcoin, he sells and converts those metals, value stocks. Okay, so he isn't holding any dollars. Okay, fair enough. So, so my question though is, why would he sell? It still doesn't really get to why would he sell the precious metals, or Yeah, it's just still a question. I mean, or maybe is it like it's not him per se, it's like an affiliate or something? That would make a lot of sense, because maybe he truly believes that, and then so he's working with another company. Maybe Shift Gold is not really him; it's something else, and then he's kind of like the face of it. That would actually make sense. I know you are on a huge list of stocks, but Camping World or Goodyear Tire business models interest you. I think Goodyear definitely cash cow. Camping World, I think I covered something similar to Camping World. I'm not sure. I think I did cover stock that was very similar to cash cow. Cash cow. My mind's getting filled with words. Similar to Camping World. But yeah, I think Goodyear is actually on the list though. It seems more obvious to me that the flamboyant shouting character like Schiff is on Michael Saylor, on the other hand, selling fear. Why own metal or Bitcoin? Fair enough. What's your view on Paul from Everything Money? Ooh. What is my view on Paul from Everything Money? I don't have like a lot really to say personally, because I don't really know much about them per se. I've said some things in the past about Everything Money, how sometimes they're evaluate like not as people. I have no opinion on them as people, but I have an opinion on them as investors, and I think that some of their analysis is quite lacking. But as people, I'm sure they're great guys. I think Paul focuses more primarily on real estate, from what I gather, and then Seth serves as like the normie on the show that tries to represent the average person. But then again, I don't think like Paul's level of analysis is enough, right? And I'm not saying like there's another creator who said something similar, but I don't agree with him for their reasons. Their reasons is a little bit different. I agree that with Paul, you can actually X a stock within the first 10 minutes. I think that for most people, they can do that. And then there's nothing wrong with that, right? There's nothing wrong with it. I'm talking about the ones he's accepted, the ones that he's actually purchased. Because I have done an analysis video, because it was asked by a subscriber to do an analysis on Paul's portfolio. And that was a conclusion I did get from actually looking at each and every one of the positions that were sent in. It was that those were lacking. So it's not on the rejection side. And rejection, someone might reject something because, they just don't like it. And that's fine. I don't care. I don't think that's bad necessarily. So what? What I think is a problem is when you accept something into your portfolio that your research was lacking. That's where things get harmful. What are your inflation hedges in your portfolio? Do you think inflation has peaked? Well, my inflation hedges, if you really thought about it, was my commodity plays, all my commodity plays. ConocoPhillips, in a sense, was. I think that's partly why ConocoPhillips did so well, oil price included, and BHP did so well in such a short amount of time. For similar reasons, I think Rio Tinto did fairly well as well. Let me actually tell you the percent gain on that one. Rio, where are you, Rio? RIO. I mean, yeah, that one did 30. Wait, no, wrong one. That's Cardinal Health. Rio Tinto did 16.62% gain in the short time that it was owned. BHP did 43.82% in the short time it was owned. Would have been better off just owning BHP alone, but or only BHP and all of it into BHP, but still fairly well. I liked both companies at the time. Some other in some extent, a lot of these companies are inflation hedges, though. Something that's not really is stuff that's typical, like Dropbox is not an inflation hedge. So in an inflationary environment, a little bit harder. They don't have the same level of pricing power as others might think. Activision Blizzard, similar thing. I mean, do you guys know that like video games have not gone up in price to inflation, like ever? It's quite funny. All right. You have to appreciate the channel Everything Money as a business. They plug values into a spreadsheet the same way every time and churn out tons of exact same content with minimal work. Yeah, I could agree with that statement. But also I have issues with their model as well. But it's more like whatever. Yeah, EVs are Everything Money are trust fund kids that preach to monotone message. Oh, thank you. I take that as a very strong compliment. What's my view on cage-free milk? Cage-free oat milk. Well, I think it's the future, and cage-free oat milk. I think it's important that we understand that we shouldn't be cruel to oats, because oats have. Studies show that oats have the intelligence that of the average human. So knowing that, we have to really consider when we actually take apart the oats, when we crush them up, when we drown them in milk, and when we liquidate them, what it must feel like. So we have to make sure that they live good lives outside of the cage. And if we can charge a pretty penny for it, why not? I think that's a good point, Julius. You have that switch. Deflation means money is gaining value. Yeah, no. I corrected myself towards in the secondary comment, but I meant assets per se. Deflation when assets are going down in price and whatever the nominal price is. But people think of deflation as the boogeyman. So money, yeah, but for the second part of your question, or next question, it's a statement here. Second part of your statement, yeah, no, money can lose value. I mean, yes, that is inflation. But I was talking from the context of Peter Schiff's statements regarding sound money. Sound money is something, for example, like a hard commodity asset that can still lose value per se, in the sense that supply could increase. But I mean, there is also the well, we won't get into that, so we can get to everyone. In fact, stagflation is possible even commodity money. Yes. Okay, so yeah, you're bringing us into it, Alonso. You're bringing us into it. And then further, commodity money doesn't improve all stagflationary economies. It only improves very, very bad ones. That's why Peter Schiff has to preach the apocalypse instead of just recession. Fair enough. Check out ASML. No, I know. I'll definitely check out ASML. The ultimate semi play. Intel said to purchase 150 free machines 2025. Yes. Well, yes. And just so again, everyone understands, ASML basically has a monopoly on this. It's a fantastic business. What do you think about cloud businesses going forward? Do you think it will get commoditized? No, yes and no. I mean, like between the biggest players, maybe, but that's not really commoditization. Commoditization is like widespread, like everyone can just do it. I don't think in that sense it will. That would be a very good question to ask an expert in cloud. ASML supply as a whole, yes, exactly this. I'd like to mention that I asked Fabio to look at Wave Power Company, and instead he went out on his boat. Yes, terrible. Are you planning on to do a video on the telecom sector? Oh, I can definitely do that too. That those both stocks are actually requested, and that's a good idea to put them all into one video. They do seem to have huge moats, except for the potential that some technology comes to look around, and they definitely don't have the balance sheets to adapt. The business model as it currently stands, one of the parts that adds to the moat is the fact that you do need to borrow so much in order to get to where they are, which adds to the complexities of it. But yeah, Verizon and AT&T, if something comes out that changes the game, they are definitely, I promise you, they're not in a position to make those drastic changes. And I wouldn't really trust those management teams thus far and what they've shown me. So only a huge change in fundamentals is what you would make you to re-examine position going against you. Negative price action based on sentiment would not deter you in a position. No, sentiment alone would not, if I've already chosen that business to be in my portfolio. In fact, I welcome sentiment to the negative, but yet I believe the value proposition is great going forward. So I welcome it. So for example, I welcome sentiment getting more negative for Meta. I want that. Heck, I actually would want sentiment to get negative for Alphabet in a big way. If that could happen, that would make my year. I also would say that, yeah, those are like more near term. Oh, Netflix. These are all near term examples where I'm saying to you right now, I'm actively hoping for sentiment to be negative. I've chosen to add them to my portfolio. And so basically now the question is, how low can I get the prices to be? And then there is a price range where I would not buy though. But yes. Okay, yeah, this is Alibaba. I had a comment actually on one of my videos, and I think you guys would find this funny. Um, I won't call this person's name out, but it was actually in a fairly recent video about the I think it was the portfolio update video. But I think someone actually thought for a moment that or they were saying that my channel or this channel is ridiculous because here on this channel we are recommending Chinese stocks. So because I was showing or talking about each position in my portfolio, I don't know if you guys will think that's funny because knowing the context of this channel, but I just thought the comment was funny. I was like, I don't know if the guy was being sarcastic or not. But it's, reminds me of that. and Alibaba is a great example of a sentiment play, in my opinion. But oof, F in the chat, JP, F in the chat. Yeah, I don't know if you already said this, JP, but your audit. Yeah, you definitely are audit if you're doing, or is tax different in Canada? Maybe your tax. I don't know. Australians hate inflation because want savings to be encouraged. Small inflation is good, though, because you want savings to lose investments. Austrians take this for granted. Yeah. The theory of having some small level of inflation is good. It comes from the idea that you want to incentivize spending, and so much of the economy is consumer spending. So you don't want people to incentivize hoarding of money. And Jeff Snyder expands on this a lot, where he says money should be something that expands and contracts with the needs of the economy. That would be the best form of money. That commoditized money sometimes is problematic because it doesn't expand when the economy is necessarily contracting, which can be a little bit problematic. So Snyder actually more recently has been putting out a lot of work regarding cryptocurrency, saying that the concept of crypto is very interesting as a potential to perhaps make better money. But he's not advocating for a particular cryptocurrency. As on this channel, the same thing. I think that, and I think I stated quite clearly in the Bitcoin, the one crypto video on this channel, which we should do tons more crypto so we grow tons more, apparently, because that apparently does work. But I'm just kidding, by the way. But the one video that I did do on it was basically saying why I wouldn't be surprised, like it wouldn't come out of left field for me if something like Bitcoin won, and I kind of map out how or what it would be like if it did win. And I do cheer for something like that because there are a lot of implications as to what would happen, but you just don't know, right? You really won't know. If there were an ending to deflation, there'd be no reason to invest. Just hold cash. An investor would be a gambler. Yes, and that's agreed too. I mean, to an extent, I'd say, but yeah, I think a certain level of deflation, just like certain level of inflation, would be not acceptable. Because, like, let's say you had deflation of about like 1%, 2% consistently. I mean, that, of course, you have the risk of that cascading to something else. But Fabio, interested in your quick take on MLI, Mueller Industries. Okay, I'd have to take a look right now, but Mueller Industries. Mueller Industries. Let's take a look at this. Okay, so what do these boys do? Okay, so I'm guessing you kind of like them because they have a 6 PE. Maybe that's why some people would be like, interested. Great performance over long periods of time. So that's indicative that they've been run really well. They do have a small dividend there. And then let me go here, pull this up. And then, okay, so let's take a look at like kind of how much cash are they really producing each year. Okay, so they're decent amount. So we can round that. Good, well-capitalized balance sheet, very well-capitalized balance sheet. Gross profits are pretty, they're okay for this. Revenue growth, why are they growing so much? Are they doing an acquisition? All right, I guess like next thing I'd want to see is, and by the way, in terms of cash flow, they're not that expensive either, pretty cheap. but I'd have to see like what the heck's going on. Share dilution, they've actually declined in shares, but then more recently jumped up in shares. I assume, without really looking into it, that they did some sort of acquisition. Revenue is for some reason, this has to be an acquisition because they had stagnant revenue growth until just 1 year, boom, and then all of a sudden their shares just kind of pop in there. Okay, plastics, plumbing, valves. Okay, so basically like a small industrial, kind of like a Leggett and Platt of sorts, but not really the same thing at all. I just don't want everyone to think that I'm saying they're the same kind of company. But similar in terms of like its taste. I'd say that it's interesting, definitely worth a look at. That's my quick take. But yes, yeah. So the Austrian economics, yeah. I mean that's again where both most of his philosophies are grounded in Austrian economics. So yeah. Thoughts on ACCO power? I'm bullish at the current price. I'd have to take a look at it deeper, but that's going to be a little bit longer to take a look at. Something like an acquisition. All right, so let me see. Some of these questions are a little bit longer questions, guys, if they're like particular stocks, because I'm going to close off the stream not too far from now, so I'm trying to get to more like the questions. But Lovesac's on the list, and ACCO acquiring Powertrain A. I think ACCO might be on the list, but Power A, that would take too long for me to analyze right here on this stream. I don't really follow financial education, but he puts he's been around for a long time given his investing approach. Doesn't it surprise you that he isn't bankrupt? Maybe he secretly invests in VT. Well, I mean, apparently for his total performance, it's about 35%. So, even if all that money, he still hasn't lost money. At the very least, he hasn't lost money. So, but yes. Oh, and I almost skipped this comment. And no problem, anytime. To be fair, Everything Money's videos are step one screening process, seeing for it's worth doing further research on. But I do agree some positions in his portfolio are a little questionable. Well, and the thing is, it's because there's some things missing in their valuation process that are quite important. And that's why they seem questionable, because they are questionable, because they didn't ask certain questions. And that's like my main problem. So that's why I firmly believe that it is highly likely that Paul underperforms over long periods of time. Highly likely. And I think he's sorry for hitting the mic again, but I think he's admitted to underperforming the market in the past. I think that's a trend that's going to continue. And it's not, again, attacking him as a person. It's just from the investment perspective. And I see everyone like the free the nipple, uncage the oats. To follow up on politics can affect the value of assets. You think the pat yourself on the back policies, and not to get political, but woke/left politics and right/conservatives be harmful to assets? I think politics in general can be quite harmful to assets, because so in general the whole we're gonna get into it, but the whole idea that power can become centralized, and at the centralization point of power, that's where we tend to find corruption. That's what I've kind of come to formulate my opinions, that corruption exists from the centralization of authority. Because like an example is, let's say like there's 3 guys in the room. One guy has the power to put both guys out of business, the other 2 guys. And so the other 2 guys, they're competing against each other. So the third guy is kind of like this other party. And the other party, he has basically all the power. So now the incentive lies, which both of those 2 guys doing business, to corrupt the third guy and make sure that the third guy puts the other guy out of business. So whatever politics or policies, I'd focus more on the ones that are attempting to centralize authority or centralize power. And you would often see that's not occasionally, a lot of times, larger entities who are multinationals, and they're multinationals and all great and good, because they'll survive any downfall of whatever country, because they're no longer, like I like to say, for example, a lot of American companies aren't American companies anymore. They're global companies, and they'll survive the United States. My personal opinion, we'll find out, I guess, but I think that they will. and they don't really care too much about the localized politics. You can kind of see an example of this is take a look at the different marketing approaches of that exact same company, and then look how they market themselves in different countries. They come sometimes completely differently. So what one country says in what one company says in one country might be completely different from what it says in another country, which goes to show they don't really care too much at the end of the day. They'll just like they'll tell you what you want to hear or what they believe you want to hear of the particular culture, and that's about it. I'm getting a little bit ahead of myself, but what I want to say is, particularly, I'd focus more mainly on where they're trying to centralize authority, and I think this is where I guess people disagree on which party, which philosophy centralizes authority or whatever, but in general, that tends to be where most problems lie, I guess. I think that might answer your question, but that's where it gets really harmful to assets, right? We get back to that like enlightened king philosophy from that 1,000-year-old philosopher Plato, talking about that. All right, so Fabio, Austrians are correct that savings is better than consumer spending. I'm saying that investment is important too. Savings doesn't mean investment if a currency beats. Yes, and that's what I was saying in the last comment about this. Was a like perhaps it's more like a spectrum of where things get bad, right? So maybe some deflation is tolerable, and with again disregarding the risk for a cascading effect. But you would say the same thing for inflation, and then some inflation is also tolerable. I guess you could actually say the same thing for both directions, because if some people always believe that there's always going to be inflation, what's to stop them from all thinking the same thing and then all overspending and then all kind of causing a cascading inflationary effect? Then the same thing with deflation. Some people start to believe that you might as well just save your money because it's worth more next year, and then everyone starts saving the money, and you have cascading deflationary effect. So I guess you can make the argument on both ends. But yeah, but Austrians are right that savings is better than you're just accidentally repeating. What do you think Musk's end game is with Tesla, making it massive company? That's a cop out. He's gonna make it profitable. Can you imagine? All right, so I think his end game with Tesla is to make it, and I think he will succeed because I was actually looking to buy another car, and for context, I have a gas car and I have an electric car, and so the gas car needs to be replaced fairly soon, and so I was looking for another vehicle. I'm debating whether I get a gas car again or I get another electric car. And I'm in the market. I'm kind of looking around and I'm just seeing comparison stuff. The Polestar 2 looks good and stuff like that, but Tesla's doing pretty well. It looks pretty compelling still. I mean, but yeah, I think that's the end game with Tesla. Is to from there he can probably, I don't know, do a lot of things. I don't know what precisely you mean by the question of end game. Like, does he have some sort of otherworldly conspiracy? It's not conspiracy in a bad way, but and actually, let me scratch that or remove that word conspiracy. Like global prospects, something like that. Is that what you're implying? Maybe. I think with Twitter, he's either going in two directions. He's either going to stir up a lot of publicity and create his own, or quite literally do what he's thinking about doing. Because Maslow's hierarchy of needs. Oh, and this actually, I'm now thinking about it, kind of combining these two questions together. I think where Musk is at his point in life, he's thinking about legacy, and he's very lucky to have achieved what he has achieved at a relatively young age for that achievement. So I think when we take a look at that, I think his intentions might actually be genuine, and that he actually wants to do something good with that. He might be the case. It wouldn't be out of the question, right? Because again, he's already has enough resources that no one would ever really. There's nothing really he couldn't get in life at this point. But maybe I'm full of crap on that. But is there more money to be made in the market for value investors, or is the DCA? What do you mean by DCA? Is there more money? Is there money to be made in this market now for the value investor, or is it just My brain's not working. What is the acronym DCA? Huh. But I'm assuming it has something to do with that. My brain's like on fumes right now. But I there's always going to be value out there. It's just some markets it's harder to find value than others. So you ask someone, they might tell you that the small caps are a value right now. I don't know, but I'd say like look for yeah, just always be looking. And then when you're looking, you're going to find a lot of things and you're going to add to your watch list. And then from there, you just wait, be patient, and you have to be comfortable with the prices you're buying. All right. No, your prices are going to be different from other people's prices, but you just have to make sure that you like them. That's about it. Bobby, what do you think about buying puts on both Tesla and Twitter? Either the deal is accepted and he bumps and Tesla is okay. So, very good question. I would say that regarding this, it just depends on what the put premiums are. I haven't even taken a look at the put premiums, but that is a huge factor that I weigh in when considering making an options play. The premiums are very important. Thoughts on PayPal's current price of 102 PYPL? I have to do an update video on PayPal because since I talked about it, I think it has come down the first video, and then I did an update video, but I actually might not have moved since the update video. It might be like stagnant right here, or it might have moved down slightly. I forget what the price was, but PayPal. My problem is like there are a lot of competitors. It is more concerning than ever that these competitors are basically doing exactly what PayPal does, and I'm using them, by the way. I'm using them personally. So anecdotal evidence is I chose them over PayPal because PayPal was too expensive, and they do the exact same thing, if not even faster. And it's a technology race. Like we're already finding out that okay, Visa, MasterCard, they're now under threat. Oh, I didn't even talk about this. So all the people that left earlier on in the live stream, they're not going to see this part of the news. But I completely forgot to mention this in the beginning. So now it's going to be hidden all the way here at the end of the live stream. But the big banks are actually working really hard to circumvent Visa and MasterCard. There is not rumors at this point. Now it's kind of like action. They are actually going after it through Zelle. Zelle's a joint company. By the way, that is such a similar a very similar actually history to Visa. Visa was an amalgamation or of Bank of America that Bank of America created with communication with all these banks. MasterCard was very similar. MasterCard is actually more similar to Zelle than Visa is because MasterCard was a company created by a bunch of banks that came together, and that's the history of MasterCard. And then Zelle is that. Zelle is a company that was made by all the banks coming together, and it's owned collectively by all the banks. And Zelle might get IPO'd out. Who knows? It happened for MasterCard. And then so the banks right now are actually pushing to kind of encroach Zelle onto MasterCard and Visa's business. Remember, Visa and MasterCard, you're not the customer. The banks are the customer. That's the issue. So the merchant acceptanceness is the network effect of Visa and MasterCard, but the customer is a Bank of America, and or not Bank of America, sorry, the banks. The banks are the customer. What do you think about FMS and HLMN? Let me see what these are. To be honest, I have to remind myself. Why is this one familiar? FMS is very familiar. I've seen this one before. I think I've analyzed this a long time ago. And then are these both? Oh, Hillman. I can give you an opinion more quickly about Hillman. Hillman recently just said that they're going to actually dilute a bunch of shares. I just so happened to was looking at them. But they're interesting business, small little business, commoditized so to speak, but interesting nonetheless because it's boring. Well, I like boring companies sometimes. But that dilution is going to be a headwind in the near term. I think they actually went down a lot this week because they reported earnings and they announced the dilution. Yeah, they went down all of a sudden in a single day. Yeah, that was the earnings day. And yeah, it went down 9.5%, and it produced. So it's going to expand about 13 million shares, about $10 a share. Yep. And oh yeah, and it rose from 13 million shares because originally they announced 10 million. Any book recommendations? Doesn't have to be an investing related. Ooh, Doesn't have to be investing related. The Toyota Way. The Toyota Way is a good book. It's a good book. It was recommended me by a friend. It's basically goes over the history of Toyota and how the company is what it is today and why they do the things that they do, why they sometimes feel like they're slow to kind of bring out things. From what I've spoken to subject matter experts about, the future of fuel or vehicles is definitely hydrogen, but and it's actually electric is a stepping stone to hydrogen because it's not going to be that difficult to actually switch the production lines to hydrogen. It's harder to switch from gas to hydrogen than from electric to hydrogen, because for the most part it's like an electric car, from how I understood it. It's an electric car, but you're just getting the energy source. The input energy source is coming from hydrogen, and there's the way it's made. But I think it's going to be really interesting. Oh, no problem. Anytime. I enjoyed the live stream too. I like, you guys ask me questions and talking to you guys. But good night, JP. Your busy season starts tomorrow, so good luck. Good luck. I ever consider a live stream solely for stock requests? No, yeah. I did kind of like an experiment where I think it was fairly successful. So that was during the weekday. This Sunday one is not going to happen again because I think Strongman's live streams are going to come back, and I cannot do 2 live streams at the same time. But I remember I'd like to do my Tuesday live stream and then a Friday live stream. I try to do both. But if I'm going to do one like that, it's going to be the Tuesday live stream. It's in the middle of the week, so I'm going to have like maybe 30 minutes of Q&A, perhaps about anything that everyone wants, maybe some news, talking about whatever's going on that's pertinent, and then getting into doing live stock requests, and then just doing a stock, and using the model and everything. And with that being said, well, the comic book scenarios. Are you strictly buy only, or do you short stocks vary? Oh, DCA, dollar cost average. Wow, I don't know how I didn't understand that. Dollar cost average. Thank you, Elemento. But yeah, dollar cost average, to answer that above question, I mean, you could, depending on your strategy. I know that's a cop-out answer, but I have in the past shorted some stocks, but I don't like to short, really. I like to just go long. I feel like I can sleep better at night going long. And then, okay, look at that. We got to the ends. No worries. I love the live streams. No worries. Thank you for coming. I also want to announce before we actually end the live stream, I already actually did launch the Discord. The comments should actually be down below. And if you guys want to join the Discord, feel free to. And then we can, chat it up there on Discord and build up the community there. Discord will allow me to do notifications to let you guys know when I post different types of content. I'm going to try to see if I can get it so it actually sends the title of the video, because maybe you guys are like waiting for a particular video, and that would be really interesting to get like the actual notification, like, oh, this video with like this title came out. I'm gonna have to talk to the moderators, see if they can do that for me. Right now there are a couple moderators there, so they will be handling, for the most part, making sure the rules are followed. Just to be clear, the rules are pretty simple. Like, do not spam, do not be mean to each other. The community is supposed to help one another, so other fellow investors help each other out. Also, obviously, no, I'm not worried about you guys doing it, but like, no pump and dump scams. Obviously, you guys aren't pumping numbers, so obviously. And then, so we're here with this next question. Wonder what Elon court case will end in. He is looking real bad, bailed out his brother with buying a bankrupt solar company with Tesla shareholder money. Yes, so that is such a fascinating story. Yeah, I don't really know what to say about it, because there's so much in that story that I have to unpack. But let me just say, it is so it screams the circumstances are very questionable. There's no doubt about it. There's absolutely no doubt about that. The circumstances are very questionable, and that alone would make me definitely second guess making any form of investments with Elon Musk. But it's like, I don't know. I really don't know. Because I'd have to like really look into it and make a whole dedicated video to it. Does it make sense to use free cash flow margin in a DCF to get free cash flow in the future? I mean, that's one way of doing it. By assuming that you are assuming some form of margin, so it's a yet another assumption you can make. But no, it should get you the same end result that you're desiring. If you're just trying to get the free cash flow margin each and every year, and then you imply like a growth rate in free cash flow margin, but you want to be careful with that because a growth rate in free cash flow margin, you don't want to do that really. You want to be careful if you automate that. You might want to customize that like unilaterally. But no, you should get the same end result. It should be fine. That shouldn't mess up the math. No worries. I'm the diplomatic. I usually in my friend group I'm always the diplomatic voice, but I try to be. I don't like to be too in someone's face or anything like that. I think we can settle things with words and stuff. No one pumps better than Elon, maybe. Do you like S&P 500 or total stock market index funds? Both two serve a different purpose. Some might argue that the total stock market index fund is basically the S&P because they are market cap weighted. And as such, because the S&P's top holdings are also market cap weighted and they are the largest companies, then the total market index fund would also, represent that. What kind of like a counterpoint to that is the total stock market index fund also will include some of those smaller caps. So idea is it actually reduces some of the volatility over time. That's the theory. Because you include, maybe large caps do worse and sometimes than smaller caps, and you can experience that kind of normalizing. And that's why you get the total world index fund kind of even takes that to the extreme and says like, we're going to buy everything. And that's more representative of the entirety of the market because the world's now globalized, I would say. And the idea is to remove or reduce volatility so that the investor can focus on other things. What terminal growth rate are you using in your model? Would love to hear how you think about it considering the current world order. So terminal multiple would often be following or changing with what you expect the GDP to grow at. That's pretty much the base case. Base case is what do you think the GDP will grow at? Saying that the terminal multiple grows beyond GDP is very aggressive. So whatever the growth rate estimations for GDP, and that can be a confluence of like where you think rates are going, because rates tend to go in line with like where you think growth rate's going to go. Rates going up may sometimes indicate that, and that's when you learn in like financial market theory in those classes. But personally, I use the S&P 500 right now because they're more profitable and less like Cathie Wood stocks. I don't like either right now though. Yeah, and that's the other thing. The S&P 500. So in theory, again, you're supposed to like stabilize. You're supposed to like put it into everything, right? To reduce that volatility, to reduce, that concentration. But the thing is, the S&P 500 also has ideally profitable stocks, less speculative stocks, because that's you can look up the criteria to get in the S&P, and that should give you an idea. Yeah, Russell 2000 is stuff like AMC. yeah, like that. Is there a place for bonds in your portfolio of any kind? I used to have some bonds. Like I kind of briefly mentioned that in 2019, I had some treasuries. Then I got rid of the treasuries. I don't have any more treasuries. And it was a short-term trade on the treasuries. But I think that you see, like, I don't even technically like tips right now. I do actually have money in other currencies. I like to do that. Like I like to buy some bonds, perhaps like some Swiss bonds, or not some Swiss bonds, but like store money in Swiss francs. Yeah, depending on the environment that we're in, I'd say there is a place for bonds. But right now, I'll tell you straight up, I don't have any. Don't have any. What will happen when there is no more emerging markets? There'll always be emerging markets. There'll always be some markets that are less wealthy than other markets. Because emerging, I know it's the way the word is sound. It's like our markets that aren't there. It's like, no, the markets are all there. It's just like levels of wealth. So there's always going to be a richer country than another country. So some countries will always be richer than others. Some countries that are rich right now won't have the motivation to maintain their current levels of wealth, because they're already so wealthy, and they don't have the same fire as before. And then other countries really want to be wealthy, and so they'll do what it takes to get there. So then you have emerging, right? But some emergings are better than others, right? So yeah, my answer to that is there will never be non-emerging markets. There'll always be less rich countries than others. No worries, no worries. There will be the video that will come out soon, the reaction video to CNBC. There was a little bit of a glitch, so I think I have to unfortunately go in at least and edit a part, and then re-upload it. But that should be up soon, and then you guys can enjoy that one. But yeah, guys, on that note, I'm going to close off the stream here. Thank you guys so much for watching the video here today. If you guys did like the live stream, go ahead and feel free to leave a like. I see that Elemental is actually saying to like the video. So yeah, like the video if you guys enjoyed the stream. Feel free again to check down in the description below if you guys want to join the Discord. It is there is a free version as well, so don't feel like it's like you must pay or anything like that. Yeah, other than that note, I'll see you guys on the next one. Bye. Oh, and happy Easter. Happy Easter. Forgot to say that. Don't want to forget that. Happy Easter. All right, guys. Bye.